Aloha! We're going to do the stock market weekly review for the week of January 23rd through January 27th, 2023. There are some links in the description below this video. One to a website, ihavesuccess.com, and then 3 links to various playlists. The first playlist is trading options for beginners, and beginners will be in all capital letters. With that playlist and these 2 downloads, that playlist has 5 videos, and between those 5 videos and these 2 downloads, you should be in a pretty good position to start paper trading, selling cash secured put options on stocks that you wouldn't mind owning. I'm going to go through this video faster than some of the other weekly chart reviews because over the course of the week I had food poisoning and I was working really long hours, still working really long hours. So at the 2-minute mark, a video is going to pop up right here. And that video will talk about why selling cash secured put options on stocks that you don't mind owning is so wonderful, especially when you get food poisoning and you work really long hours. Now you can substitute food poisoning for anything, and you can substitute working long hours for anything. If you're busy with anything, this video will help you understand by showing you a financial statement and how various outcomes of different option trades. PS, it's coming up. Boom, right there. You saw it. 2 minutes, right? So just keep in mind, 2 minutes. That's easy to remember. 2 minutes. It popped up. It went away. You can come back and get it. But that video right there, I show a financial statement. Break down financial statement. Income, expenses, liabilities, assets, and I show how selling cash secured put options, there's generally 2 things that can happen at expiration. And with selling cash secured put options, the reason why I was able to have food poisoning and be working 11 hours a day for X amount of days in a row and not really pay much attention to what was going on with my trading is because of the bulk of my trades are selling cash secured put options on stocks that I don't mind owning. And it really breaks down like how this particular strategy versus other particular strategies, how they affect your financial statement upon expiration date. So check that out at the 2-minute mark, and I would highly advise learning how to sell cash secured put options on stocks you don't mind owning. In fact, I advise it so much that is the mission of I Have Success, is to help you begin your trading journey by learning how to sell cash secured put options. Yeah, I want to get something out of it. I've got some selfish interest, and so does everybody. Basically, maybe 99% of everybody. Maybe it's 98. The majority of people have selfish interest. It's just the majority, maybe a significant amount of those people are just liars about it, or hypocrites about it, or just not being honest with themselves. So there's nothing wrong with wanting to get something, for yourself, as long as it just doesn't violate other people. So with that being said, you guys check that stuff out. Let's get into looking at the markets and see if we can get through this a little bit faster. We'll start off by looking at those general markets. So each chart is a weekly, each candle shows one week of trading, and we're looking at 6 months of trading data with our volume down here. So we see overall over the last 6 months, the dollar kind of rose up a bit, hit this high, had a pivot area right in here, and has been basically in a downward trend, fell below this 200-day moving average and has kind of stayed below that 200-day moving average. Tested it, I guess this is the time during these 3 candles it was falling below it, testing to see if it was going to stay below or go above. But when it fell below, this is the only candle that it really kind of tested it. Everything else is seemingly, I mean, it could fall further, but just based on these candles right here, maybe it's running out of steam to the downside, and I can tell because of those that's a complete doji candle here, and this is pretty much close to a doji. So maybe this just run out of steam, maybe it's taking a break a little bit. Overall, like whether UUP that represents the US dollar, like, now we all know this, and what I mean by we, I mean me and some people in my group, we all know that the value of the US dollar has been in decline and continues to be in decline and will remain in decline unless the government changes what they do. But that's not happening, right? It's not happening. So you can guarantee that the prices of things are going to continue to rise, and that's really showing you the value of the dollar. If the prices of things were getting lower because of the value of the dollar, then that would be dollar strengthening. So it would take less dollars to buy things. In this case, we are seeing prices go up over time, mainly because the value of the dollar declines. Mainly. It's not the only reason, but it is the reason why maybe 7 years ago there used to be a $5 footlong from Subway. It was very, very popular. A couple years after it was here, it was gone already. So this is not something new. If you think, oh yeah, you're blaming a current politician in office or a politician before that, you're not seeing the bigger picture. This, if you follow the trail back to 1971, maybe you can even go back to 1913. This is not a short game. So when you're pointing the finger at people that are in charge now, yeah, they're definitely problems, and they're responsible, and in whatever gang you're affiliated with, you're affiliated with the Democrats, the Democratic gang, or if you're affiliated with the Republican gang, both of these gangs are complicit in this. They're just in one big group. Looks like they're separate, but they're not. Anyways, so that's what's up with the dollar, right? What will go on now. Sometimes what happens with the dollar is, as the dollar drops, gold will go up, and as the dollar goes up, sometimes the dollar goes up, sometimes gold will go down. You can trade those inversely if you want. Volume lower on the dollar, volume really picking up in gold. It could be the reason why gold is going up, or it could be, as Kevin Muir from Macro Tourist, I think is suggesting that gold is going up via central banks buying. Could be a bit of both, right? It doesn't have to be just like one thing. TLT was in this nut. Look at how smooth that downtrend was going down, and then smooth going up. Pivoted right here, pivoted here. We don't know if it pivoted here because we're only seeing 6 months. We have to look at like a little bit longer. But pivot here, pivot low, pivot high. Pivot higher low. Not quite really a pivot yet. Volume kind of pulling off, cooling off a little bit. And kind of what has been going on for a while is that the stock market has kind of been mimicking TLT. So TLT going down, stock market going down. TLT going up, stock market going up. I don't know if it's how tightly correlated it is, but TLT has been going up. You see the stock market has been kind of going up, trying to go up. Yeah, I mean overall it's going up. Gold, oil has continued to, look at this, it's just continued to decrease, but it's kind of staying in this range between about 70 to 80 lately. But we see over the last, I don't know, maybe 70 to 90, 70, some there over the last 6 months. Technically up here, I think 70 to 90 It'd be a little better. About, if this is 6 months, this was a little more than 3 months. I'm not sure where that is. 4 months or so. And so maybe for the last 2 months or so, it's kind of been going sideways, a little over 2 months, whatever. Bitcoin really rallied up quite a bit. Big percentage move over here, and it got above that 200-day moving average at the moment. So last week it got above the 200-day moving average. This week it's staying above that 200-day moving average. And if it can stay above this 20,000 mark, that's a big deal. Yep, it's a big deal. It's still a long way to go before it proves that like Bitcoin is going to the moon. And this is another thing too, is just you know, add balance to the other side, because I think Bitcoin has been going down so long that and not only has it been going down so long, but the hype to the upside was so strong that there was just like, I even heard people I associate with like on a weekly basis just really making some bonkers type of claims about cryptocurrencies and governments and things like this, and it was just really like bizarre, bonkers type of situation. So maybe it sounds like, you know, like I'm anti-crypto or something. Not so. This Bitcoin could stay around. It could stay around for, I don't know, 20 years, 100 years, whatever. Who knows? Maybe it's here to stay for until humans are gone. Now that doesn't mean though that it has to go back up in price. So we're trying to figure out where's that fair market price. Kind of the problem with figuring out what's the fair value of Bitcoin, because at fair value, you know if you're buying, getting, you know if you're getting a fair deal. Above that price, you're paying, it's expensive. Below that price, it's a good deal, right? But what do you look at fundamentally to figure out what that fair value is? It has no earnings. The normal type of models that are used to try to calculate the intrinsic value of an asset, they don't apply to this because it doesn't have these fundamental things. And if you say, well, it has the biggest network effect, okay, well, how do you translate that into either a ratio or something? How do you translate that into knowing if you is buying at 25 a good deal? Because let's say if 40,000 was fair value, then anything below 40,000 is a good deal. The lower you go below, the better the deal, right? So that means 25 would be good. I'm not saying 40,000 is. I don't know what it is or where it is. So me personally, if I lived in a state that granted me enough freedom, which I don't have enough freedom to easily trade Bitcoin. I can't trade it here in Thinkorswim. I can't, even though Tastyworks lets all their customers trade it, assuming that the state that the customer lives in is a free enough state. But here in Hawaii, the slave shackles are on at least tight enough that we are not allowed to trade Bitcoin. Now, I don't know if this is true or not, but I heard that the state officials, even though they don't allow the peasants like myself, but they do allow the banks. So it just further illustration that you know, it's not only racism that we really have to worry about. There's something, I don't know what the name of it is, and but you know, no matter, we got every nationality here in Hawaii, and they're not giving me the white privilege to trade it, but the banks have the privilege. So that's something to consider. You know, is it bank privilege? Is it you know, I don't know. You got to tell me. I really don't know. I just know for a fact that last time I checked, I was never easily able, and I've tried more than one time throughout the years. First time I think I tried trading Bitcoin, it's probably 2014-ish, and something like that. So the VIX has been going down, hit this for the last 6 months, hit this low point this week of 1797. SPX, we see, has been rallying over the last month. This green bar here, this red bar was ignored, stayed in the top part of that trading range. right, so we got 1 month of trading right here. I don't necessarily mean exactly 1 calendar month, but each candle represents for 1 week. So we got 4 candles here. And so we see kind of bottoming right here, start pivoting right in here, and beginning this bull run with opening higher than it closed, and kind of, it's a pretty weak candle, but it engulfed that and engulfed quite a bit to the upside. The next week, we open up like a little gap open where it closed last week. Even though it retraced back into here, it's like kind of touched the 50% point of this body, this candle, and prices shot through the 200-day moving average. It closed significantly over here in 1 trading week. The very next week, prices opened equal, right? Closed here, opened here, retraced all the way down here, which ended up being a good sign. It tested to the downside. Buying pressure pushed it all the way up to closing here, and yet it traded up here. But it did, see how it stayed in that top part of the candle. It doesn't guarantee that something's going up, but kind of gives you a different indication than if it closed way down here. And then the following week after that, we see that prices opened a little bit higher than they closed this week, right? This week right here, not this week. And just retraced back down into here. Didn't even, got kind of close to that 200-day moving average, but didn't touch it. And trade a little higher up there, but pretty good run in the S&P 500. I think it could continue a little while. I don't know how little of a while is, but we're really, here's our last pivot area, right? Here we got a pivot high. So if you like back trace, right? Here's a pivot low, here's a pivot high, and right now it's up against this pivot high. So let's see what happens this coming week, this trading week. What's going to happen? There's a lot of earnings coming out that will could potentially push prices up higher. If we see the S&P 500 strongly get above here, we see right in here showing us again kind of in this area where prices kind of got caught. And then the next point would be right in here, right? So we'll see how that works out. Dow Jones kind of seemingly sideways, right? It's technically, you got this high, lower high, not nearly as bullish looking as the S&P 500. And on this one, you got prices in the last trading month. Same thing, pivoting around this area. You got the strong bull candles to the upside here that opened basically where this candle closed, and totally engulfs this doji-ish type of candle. And then the prices open for the following week just basically a little higher than where they closed this week. Retraced about not quite 50% into the body of this candle, and really just pushed forward. The next week opens a little lower than it closed and really just sold off. End up selling off in 1 week later, losing all this gain right there, and closing in about a little bit less, I don't know, right around the 50% portion, a little less than the 50% portion, lower, almost to the 50% portion of this candle here. And then the following week after that, boom, prices shot back up here, right? So now, but if you just look at these three weeks, high, lower high, lower high, is that really, it's only 3 weeks, right? It's a small part of this big story. So just the point of Dow Jones not showing nearly as much strength as the S&P, although it has been above its 200-day moving average significantly longer than any of the other indices. NASDAQ finally broke above, closed above that 200-day moving average. It's pretty good, pretty significant to pass this. Here's going to be the next area of resistance, and to get over there. Let's see if it maintains that. We got this low, kind of a lower low, you know, this pivot here, this pivot, close above that. I'll see if it stays above, and Russell 2000 breaking above this pivot point there, and low, definitely got a higher low there. Looks like potentially W forming. So let's see if it really can break above this, and then it's in this resistance area. Could break. It could, you know, potentially come up to here, but if it fails, I don't know. Everything's kind of. It looks like things could go up through, especially through earnings. We'll take a quick, hopefully really quick, look at these sectors. We see that the technology sector has been doing, oh, that's 1 month, sorry my friend, sorry, I put on the weekly. I was wondering why those candles look so crunched up. All right, okay, technology, low, higher low. It's kind of, it either is breaking through this area right here. It seems like maybe the 140 might be a little somewhere between here, maybe 135 to 140-ish area. Let's see if the volume comes in good. Sometimes volume doesn't come in good. Like, look at this. Price has been going up on these weak candles with low volume, but price has been going up nonetheless for that sector. Healthcare sector, is that making some sort of, like, was that a little bull flag pattern here on the weekly chart? We'll see. Some low volume, a lot of selling coming through here, and you see during this time, this was like the strongest sector of the market during that time, and then prices kind of sold off. So looking, it's not the strongest bullishness here, but we're seeing some bullish strength here, seeing some bullish strength here, bearish here. It's a really bullish candle right there, but it's battling this downward sloping 200-day moving average for consumer discretionary. And man, I don't know if you guys hear this, but with all these layoffs that I hear about, and I just really don't. I'm not hearing any news that is like overwhelmingly. I don't hear like one topic that overwhelms a handful of bad topics, and I definitely don't hear a handful of good topics. So I can't really even think of one particularly, you know, good topic that's overwhelming. Like, why consumer discretionary? Like, what is it? You know, what's going to reverse all these people getting laid off? What's going to reverse that? If that doesn't get reversed, then those people are probably not going to be buying a bunch of discretionary purchases. So, I don't know, like, seems to be kind of a simple way of looking at it, but sometimes simple works, right? Straight punches beat curved punches, and as far as speed to get to the target. And financials, so low, higher low, right? Maybe we got a W forming here, but look, it seems to, I don't know, it seems to be getting stuck right in there. Definitely. But it could go further. It could do, you know, one of these, but it's not. It's kind of doing some sideways thing, but could start going forward. So let's look at that as some bearish potential bullishness. I mean, low, higher low, some strong volume coming in there on the industrials, and low, higher low, but same thing, kind of battling here. Low, and it is a higher low. It's kind of a, if we want to call this a, it's not really a strong W, but yeah, you could say that's a W, right? Down, up, down. This part where it pivots up, broke through this part right here. So that's looking bullish. Same thing over here with retail. Low, higher low. Got our W formation here. with this part being lower than this part. Seems to be prices breaking above here. This will really be the another part to look at, and seems like we got it here. So not so much over here on utilities. Maybe utilities kind of selling off because tech and other things going up. But yeah, I could see prices moving up in the stock market, and we see that we're to this point right here, right? We were here, got up over here. So we'll see even if it continues to go up. Like I'm still kind of the belief that we're in more of a range bound. At least at the moment, we're in a range bound market. So we got this point where it's kind of right in there right now. And if it gets up through there, then it's got this kind of this area, this next area right through here, where you see that resistance right in there. All right, prices right in here. And please really understand, I'm not saying it can't go higher. I'm not saying it can't go up. It could. It absolutely 100% could. And how do I know for a fact that it could? Because prices can go 3 ways. They can go up, they can go down, and they can go sideways. So I know that going up is a possibility. But it's got to get through this to go up. That's just it. Now, does that mean it's going down? No, not necessarily, because if it goes down, it's got to get through. Here's a small one right there. You see it right there? Let's do this. Zoom in a bit. Price has got to get through. Right, where's our stuff to the upside? Right here. So we're kind of right in there. Right in there. Right in there. And we see these dots. So where is that roughly? It's definitely this range-ish type of area of like somewhere around there, 427. Let's just go with 430. All right, let's put a mark at where's 430? Kind of should be right in the middle. Roughly like kind of like that. Sort of. I know I took a dip down. Right now, if we're on the downside, we got one right here, pretty close to right here. So that's potentially just giving a little bit of support. Probably not super strong support. But look at right here. Like that's not too far away, right? Right there. Right there. Right there. Right there. Right there. Right there. Look in the left. Ah, there it happened again. You can see those little pivot areas can just give you an indication here, through here. So once I guess we got one here, but there's like more action kind of in in this area here, which is kind of like sort of like that. I mean, obviously you can, it's a bit the thing that's not subjective is prices pivoted right there, right? And prices pivoted right here, and prices pivoted right there, right? Okay, we get it, that's objective, but exactly like where the range is, it's a little bit subjective. And I think prices can go below the range and come back, and they can go above the range and come back. They can stay within the range. At some point, if we are going to be in a range bound market, at some point we won't be. It's not like we'll be in a range bound market for an eternity. You could be several years, or it could be several weeks, several months, whatever. Just like this downtrend was several months. So until we break out one way or the other definitively, until we do that, like we're just kind of waiting to see which way it's going to break out. Until it breaks out, it's going sideways is what I see it doing now. And so we'll see. This could be the breakout to the upside. I don't know of anything other than, like, I can't think of any good fundamental reason why it would break out. I can think of reasons why it might break out, but not based on fundamentals. Like, why might it break out not based on fundamentals? Some programs like Operation Twist, quantitative easing, something like I don't know, the Fed lowers interest rates, makes it real easy for companies to borrow money, and they buy back shares of their stock and pushes prices up, things like that. But as far as like the economy is doing good and these companies are legitimately growing type of thing, I don't really see anything. Like, like what you would ideally, what most people I think, think about, like the stock market goes up because, oh, the economy is doing good. Well, I don't see any economy doing good stuff, but it's good to keep in mind that the stock market and the economy, they're not connected anymore. They're a bit disconnected. There might be a little bit of like flow back and forth, but this was not good economy. It was driving this up. If it was good economy, if it was based on the economy, it'd probably be going down still. That was reducing some rates. That was some goosing the stock market up, right? That's right. So let's see. Now, if prices are going to keep going up, though, what could you do as a seller of cash secured put options on stocks that you want to own? For example, in this bull market here, we see prices going up. The risk of prices going up is that if you kind of get addicted to making premium, then you might start accepting selling at strike prices that you actually don't want to buy the stock at. So there's a little bit of risk there, right? So if you do that, right? And what I mean by that is, like, let's say during this stock market downturn right here, right? You loaded up on, not only did you sell a bunch of puts through here because premium was sky high, and you were just like, wow, look at, I'm buying H&R Block for $13. Oh, I'm every penny I can come up with, I'm putting into that. I'm buying Energy Transfer at $6. I'm loading up on that. Whatever the stocks that you loaded up on, then at some point they start moving up, right? And then, maybe you see this, right? You're selling your options here. Now it's up here, right? Now it's harder to get premium. So maybe you start selling your options here, and then you start selling your options here as it moves up, and then pretty soon, you're back up into these higher prices. Now here was a bit of a good pullback right through there, but other than that, it wasn't as like deep of a pullback. So depending on what stock you're selling on, there's really more to it than just looking at the S&P 500. But if it's going to go back out into a upside market, it's basically easier to have cash secured put options expire worthless, because overall the whole stock market is kind of moving up. And I think the thing, as I mentioned, the thing you got to be careful of in that type of bull market is like, what is selling a cash secured put option? You're making a legal commitment to buy 100, at minimum 100 shares per contract of a particular equity at a certain price. So You know, don't just assume it's going to go up. At the minimum, even though it might not be your ideal to price to buy it at, just like realize like I'm committed to buy it at this price. Otherwise, you're losing the benefit of that video that I talked about at the 2-minute mark, right? Watch that 2-minute mark, and when you're in a situation where it's just like you don't care what happens at expiration, that's pretty powerful. In fact, it is one of the most powerful things that you can have in your trading situation when you have a really, really busy life. When you can just put trades on and it doesn't matter what happens, then you can go on with your life and just whatever happens, happens. It doesn't mean you don't pay attention or whatever, but I've definitely had trades where I was like, before work, I'm panicking. I'm trying to make an adjustment because if I don't, I'm losing money. You know, I'm running out of time to get this adjustment to go through or close the trade at like the least amount of loss. You know, it's not even trying to break even at that point. It's just trying to minimize my loss or try to roll it in a way that would make sense or make some sort of adjustment. And the fact is, I got to be to work in an hour and I still haven't taken a shower yet. And it's a, 10-minute, 15-minute drive to work. And it's going to take me 15 minutes just to get to my car and, or at least, get to my car and get down the elevator, down parking and all this stuff. And so it's like a half hour and I'm just running out of time. And then what am I going to do? Try to make the adjustment on a little cell phone? And if I don't do it before I go to work, then I get to work at, let's say, 8 a.m. and in 3 hours later, the stock market's closed. So selling cash secured put options, I don't worry about it. I'm like, okay, all right, I'm taking ownership of the stock. Great. All right, it's expiring worthless. Great. But I'm not like having my stomach, oh, I gotta make this adjustment. Oh, I'm gonna lose money. And I still put on trades like that, right? I do. It's not that I don't do those trades and I only do cash secured put options. I'm just pointing out what the benefit is. What's the benefit of doing those other trades? You make more money. That's the benefit. Yeah, I love it when my naked options on crude oil futures expire worthless, and I make like, I don't know, anywhere from a little bit of money or a good amount of money in a relatively short amount of time. I love that. It's fantastic. But the level that I have to be aware of what's going on and try to structure closing them with my work schedule and all this stuff and be paying attention and all these things. But because the futures market is open almost 24/7, it does make it a little bit easier for me. So a lot of times I'm doing trades after like work hours. Stock market, I can't really do that. So I kind of gravitate towards futures in that regard. But so yeah, so learn how to do the cash secured put options on stocks that you wouldn't mind owning. It's just such a wonderful strategy to have in your toolbox, especially if you're going to go on vacation or something like that. And over time, let's see if I just noticed something. Over time, let's see if we're going to start getting something like that. But right now, it looks more like this, right? Maybe it's going to push to the upside. We'll see, right? We'll see. But regardless of which way it pushes, good buddy Brent is, I only have one trade right now that would potentially put me in a lose. I only have one trade open out of, I don't know how many, 7 to 10. And out of 7 to 10 trades, I only have one trade open that would really be compromised if the stock market continues to move up. So I think that's pretty good, right? The majority of the, like at least close to 99%, like 90% of my trades, I don't care what happens with the stock market. I'm just going to make money. And I'm willing to take a little less money in order for that greater flexibility. Because I'll tell you what, when I'm working 11-hour days, I'm still making money. You guys have a fantastic day. If you haven't already, learn to sell some cash secured put options on stocks you wouldn't mind owning. You're going to love it.